All right, what's going on, family? How are you? Let me make sure check that I'm not sounding crazy today. Hopefully, you're doing wonderful. We're doing a little bit earlier today, so if you're rewatching later in the evening on the East Coast or around the world or on Central Standard Time, I'm on the West Coast, so it's currently around 2:30, 2:36 to be exact here on the West Coast. If you are East Coast time, if you're over on New York Standard Time, you've got 5:30 on your horizon. So I know this is normally at 7:30 Eastern Standard Time, but got some obligations in a couple of hours. So I want to make sure to get this out to you as soon as possible because it's an important week that we discuss what is going to happen with FOMC. If you don't know what FOMC is or you've never seen an FOMC meeting and how the stocks react to it, it is the big day for the Fed to make a interest rate cut, pause, hike decision. All right. And at this current space and time in 2025, September, it is set to cut rates. Now, this has already been talked about and it has already been kind of priced in. The market's been extremely bullish leading into this news. And today we want to talk about not how to predict what's going to happen, but how to react to what's going to happen. So we'll talk about the fundamentals a little bit about how a rate cut could be beneficial. But also, we had some recent data come in from our unemployment that spiked up a little bit. This past unemployment data, our NFP that we had a couple Fridays ago, as well as the inflation. The CPI report came in a little bit on the high side, but right in line with expectations. Our PPI report also came in line with expectations, beating it. So we've got some decent data reports, which is why the Fed is cutting, but is, as you know, Trump and others have said before, is Powell too late? Right? Is he too late with these rate cuts? Is he being a little bit more cautious? So when he finally does cut rates, right, is it going to actually spur the market higher, or is it going to cause some concern? So we've still got some things that we need to make sure that are in check going into this rate cut decision day. So if you could give me a like, a subscribe, a comment down below. I want to earn it from you if you're new, if you've been referred over here from another platform, if you've spurred onto here sporadically, welcome. My name is Dr. B. I'm a holistic life and business coach and strategist for entrepreneur, content creator, and also an options and futures trader as well. So been trading the markets for the last going on 6 years actively since 2018, 2019. So I have traded the 2020 market, a Trump market, as well as a Biden market, which was a little bit slower, a little bit really good for long-term investments to just kind of slowly, gradually, with less volatility with Trump, but there's been a lot of money being made in a very short amount of time if you're on the right side of your investment portfolio or trades coming into 2025. All right. So we got an interesting time on our hands because the consumer spending is going down. Right. There's obviously a discrepancy between the consumer and, where the middle class falls because less people have, discretionary income. Right. As well as some people have an abundant amount of income, or boomers or whoever. If you're a millennial or a Gen X or even some Gen Zs out there, you've made a decent amount of money during the last couple of years. You've got some extra. But we're talking about the majority here, and the majority is like, man, I wish I could have bought the dip in April. I wish I could, load up the boat, but my consumer debt or whatever has kind of got in the way, and I'm missing opportunities, right? So this is a time to learn. If you're even not actively trading in the markets, I think it's a good time to understand what's going on in our economy. All right. So without further ado, let's jump into it. If you've never been here before, we will go into the fundamental analysis. So take some notes on how you may want to read how I'm actively looking at the market and analyze and finding trades, finding long-term investment opportunities in the stock market. So get your notepad out, get your charts up. Go ahead and check that chart video out as well, because I know there's newbies on here all the time and still kind of trying to figure out how to read a stock chart. I put a video on the channel, how to read a stock chart. You guys are awesome. Y'all been supporting the channel, been referring people. I'm looking at the subscriber count. It's going up and up and up. However, there are still some people that are tapped in that are still not yet subscribed. And I used to be that person, right? I used to be that person that did not subscribe, was like, I'll just watch the videos. What's the big deal? But now on the other side, it does help when you're providing valuable content to hit the subscribe button so you're notified, and also to help the content creator out. All right. And we're putting in time, effort, doing the research so you don't have to. So we'd appreciate it. All right. Let's share the screen here, jump into it. And I'm going to go back and forth between Robinhood, Legend platform here, which a lot of people are familiar with. They came to my channel from that video. I've been looking at the statistics, but I like to use Webull as my primary active like trading charting platform. Okay, so I trade on Webull. I also trade on Robinhood. So I would jump back and forth. If there's any questions, newbie questions, beginners, or if you want me to take a look at particular stock and analyze it, please let me know down below in the comments. All right, let's look at our fundamentals first and look at the economic calendar for this week. And there's nothing really other to say than beat a dead horse here. Is on Wednesday is our FOMC rate interest decision. Okay, and we're already projected to cut rates. There's about a 90% chance that we will have a 0.25 rate cut, which is kind of right in line. There's like a 10%, 8 to 10% saying that there may be a 0.50. Okay, so we will see if there's a 50 basis or a 25 basis. I'm leaning more towards a 25. It is important which one is done, because if we have a very aggressive rate cut, right, we could have that market kind of pull back a little bit and get a little bit fearful that, man, why was it so aggressive? What's actually going on, right? So if you're still learning, it does matter even further, like not that just we're having a rate cut, but how the rate cut is actually initiated. Is it a very aggressive rate cut? And if you're thinking like a hedge fund or a big time investor, you're like, why is he cutting so aggressively? What do we not know? Does he see the inflation data higher? Is he coming in too late? Was he supposed to cut sooner? Right? Things like that. But if there's a 0.25, I think we go higher. And then we may pull back after people kind of rate cuts are over. We spur a little bit higher, a little bit of a pullback, and then we go into the end of the year and we react that way. Typically, the end of the year, going November, December, is more bullish. This is a very interesting September, okay? We still have time for a pullback. We'll take a look at it, but there's really no signs just yet of slowing down. We are extremely bullish, which September, October, maybe October gives us that time frame, but usually September, October, a little bit more of a kind of red bearish pullback type of scenario. And we have not gotten that signal just yet. So it is seasonality. It is typically always truth, but there is the markets are irrational, and we've already been bullish for the last 5 months. So one of these months, the quicker we go up, the quicker, we can fall down is equally quick. All right. So I just want to, always point that out for folks that we want to be aware of those things. Okay. So Tuesday, we've got retail sales. That'll be interesting. Business inventories, home builder confidence index. So Tuesday, we do have a pretty heavy morning on Tuesday. Tomorrow, nothing really too heavy. Manufacturing survey, it will probably spur a little bit higher. Maybe we get a little bit of profit taking on Monday before the big data comes in. People just, maybe spurring a little bit higher, but going ahead and locking in some profits before big data. So I could see some profit taking maybe on Monday or going into Tuesday timeframe. And then Wednesday, we'll just kind of chop around in the morning and then see what happens. Thursday will be the day to really trade following the FOMC. Everything's clear. Friday, and then into next week, we still have heavy stuff. Into Tuesday, we have PMI, new home sales, GDP next Thursday. So we still got some heavy stuff coming in to next week. Now, one other thing that you want to put on your calendar this week, if you're taking notes, is that we have an OPEX or OPEX day, however you want to pronounce it, that is an option expiration day. Okay. All that simply means is typically I'm not going to give the fundamental definition, but I'm trying to keep it as simple, third grade level as possible. If we have any advanced folks on here, you already know what that means. Options, either quarterly, monthly, weekly. I believe this one's a weekly one. It happens every third Friday of the month. So this is a monthly OPEX. Okay. That means that options from various different trading sectors, futures, X, Y, and Z, they expire on that particular day. So if you've ever noticed in the options chain, when we trade options, that there's a little bit more open interest on the third Friday of every month, that is the reason why. Okay. That is why typically most people are looking for that third Friday of the month if they're trading monthly options or weekly options. There's a lot of volume on those options, and that is the day that we could have that kind of Friday kind of potentially sell off. Okay. Especially if we spur a little bit higher, we could have a little sell off or a pullback into Friday on that OPEX. Now, another OPEX day is the end of the month. This is like a monthly or quarterly OPEX, I believe. So on the 26th, on the 31st, let me double check. Let me be right. OPEX, September 31st, I believe. Okay, so here's the OPEX calendar. Let's go into September. Yep, the 30th is a quarterly expiration. So I told my group inside of Leverage that we have 2 OPEX that are coming in this month. Okay, we have this one and we have this one. So after this FOMC, whether it's bullish, that's fine. But going into these OPEX days in the end of September, this could be our final push into like the 5th bullish month since the pullback in April. Okay, give me a 1 down below if that's making sense to you. So we've been bullish for May, June, really kind of the end of April, but May, June, July, August. And then if we are bullish going into this end of this week, okay, after this FOMC, that could be like our weekly pullback. Next week could be our weekly pullback into PMI and then that quarterly OPEX. Okay, all the options that were the quarterly options are now starting to expire on that 30th day. Okay, so October could be our spurt to the downside. Okay, then we get bullish into November, bullish into December. Okay, that is my thesis. It doesn't mean it's going to happen, but I'm just using my historical context, experience, and looking at the opportunity just so you're prepared, right? Depending on the type of investor or trader that you are, okay? I don't want anyone that comes on my platform personally to be shocked by something, right? We already know that we're bullish. That's a given. But the question, I see it on like the free Robinhood Facebook groups, you know, if you're a part of them, that's perfectly fine. Like, you know, on Facebook and whatnot, they're like, why isn't NVIDIA pulling back? Why is Oracle tanking? It was just at 345. I'm like, because there's a gap and it was overextended. You get what I'm saying? So there's not a rationale of like why these things are happening. When people come to my channel or my clients or people inside of Leverage University and outside of our trading floor, they're like, oh, yep, Brian told us there was 2 OPEXs, right? I'm not surprised that there's a pullback or a red day or something like that, right? So that good? We good? Let me check the chat. If you are jumping in, awesome. Quad witching, yep, same thing. Most likely a 25 point. Yep, we're on the same page. Tanvir, appreciate you, brother. Awesome. Yeah, I'm early today. I said I'm early because I've got some obligations that I forgot about that I put on the calendar on a Sunday afternoon. So yeah, I'm not going to cancel it. I'm just going to get it done earlier. So I appreciate y'all checking in a little bit earlier, and I'll be quick and we'll be out of here. All right. Let's see if there's any. Let's talk about some of the data really quick before we jump on the charts. So this is our inflation rate. Okay. We're sitting when people talk about, you know, the inflation data that's coming in, the CPI report, PPI report, CPE, things of that nature. Our United States inflation rate, we're sitting right here. If you can see from December 2025, 3%, 2.8, come down 2.7, 2.7, 2.9. So we're in range. Like we're doing fine. We're bringing the inflation rate down. It's just kind of teeter-tottering back and forth. But if we want to play devil's advocate, like if we believe rate cuts are good, like if you're in real estate or you're in the stock market, you're like, Brian, a rate cut is good. If they give 25 basis points, we're going higher. Yeah, I believe that. The concern, if you're playing devil's advocate, why it's so difficult for the Fed is because there has been some unemployment data. Okay. And unemployment, as we know, ticked up. Right. So with that, if we have unemployment, if we cut rates too aggressively, right, that could spur the market a little bit with this unemployment being, you know, a little bit high, right? So that's why the Fed was a little bit skewed potentially as to like, how much do we cut? Do we get aggressive? Do we not? Right. And I think they're just going to come in with a 25 basis, right? Market will probably go a little bit higher, but we still want to keep intact, as we've been talking about inside of Leverage University, that the concern right now is the labor market, right? It's been talked about everywhere, right? Some of you have lived through and experienced firsthand as a grown adult 2008. We all have experienced 2020, right? And those are prime examples of how the cuts were a little bit too aggressive, too late, right? So it spurred the market and it was delayed, right? So my kind of idea, as I've been talking about for the past, and I will talk about this later as we get more signs and signals, is that I'm looking for really another 2022. Okay. I've already put together kind of my plan, my thesis, my ideas, which is why personally I've lowered a lot of expenses. I've kind of stacked cash to the side. I've lived very minimalistically now, is because, and I've got rid of a lot of businesses and things, like, because if that happens again, if we get another 2022 or a recession or something like drastic like that, that is going to be another like decade opportunity, right? So if y'all remember 2022, it kind of snuck in there a little bit. If you were in the stock market in 2022, and I'm just talking about the recent, I'm not talking about 2008 or 2020, but 2002 was a full bear market year. Okay. And it was following an extreme bullish push from when Trump got in office. So when Trump got in office, his first term, right, that 2020 drop, and then guess what we did, right? Right when he got in office, we dropped, and then he got in office and we spurred higher at the end of the year in 2020, fully recovered that move plus some, as we're doing now, right? Tariffs were in play 2018. And then we had extremely bullish year in 2021, right? Extremely bullish year, which is kind of what we're having now. So if 2026 comes in and we have a potential bear market, or 2027 comes in and we have a bear market, that's what I want to be prepared for, right? Because right now with AI and whatnot, if you're in, just keep dollar cost averaging, like just dollar cost average. If you got extra cash, dollar cost average. And I personally think learn how to trade, because there's a lot of opportunity still in the market, but there's also a lot of very overextended tech stocks that have ran to their new all-time highs this year, right? And when they do pull back, whenever that is, whatever's going to spur it, you want to be prepared for those things. We good? Cool. All right. So I'm always trying to think of, 6 months to a year ahead of like, where is this data spurring us, right? When everyone's talking about AI, oh yeah, whatever, ChatGPT is nothing. Now everyone's using ChatGPT. Okay. Now everyone's using Gemini and other AI tools. And this was talked about, 5 years ago? Like, hey, watch out for AI, little things here or there. And now it's like fully integrated into people's workflow. That was 2, 3, 4, 5 years ago. So now it's like, okay, well, what does the market look like? What does the labor market look like? It's already being talked about. Like, everyone's looking for tech jobs. And now it's like, do I need to go back to blue collar work? Do I need to get a trade? Do I need to start a business? Do I need to get online and get my presence, online sharing something, right? Obviously real estate's still going to be there, but like, this is still early, right? It's still very early. So as you're hearing these talks, now it's time to start thinking like, what's going to happen. All right. Cool. And everyone's like, Brian, everybody's been talking about a recession for the last 5 years. I'm like, yeah, you trade or invest with the market that you have, right? But long-term investors, or people that are actively in the markets, whether it's real estate or the stock market or business ventures or whatnot, you're forecasting, right? So when I got rid of my Airbnbs, I was forecasting. I was like, this, unless you're in luxury Airbnbs, or unless you're in a city where, you have prime locations, it's getting saturated. There's no way this is sustainable. More rules, regulations. I'm like, this isn't even worth the profitability and the headache anymore, right? And I'm not willing to do another type of Airbnb. I was doing Airbnb arbitrage, rentals, apartments, that type of thing. So same thing with the Turo cars, right? I was doing very well with Turo, but in the market, I started seeing the car prices go up, and then everybody and their mother was putting their personal cars on Turo, and it was lowering the value of my Turo cars that I rented out for business. I'm like, I'm not putting this vehicle that's, 50, 60, $70,000 on for 70, 80 bucks. Right. So I just wasn't, I was forecasting those things. Now they still do very well, but as an investor minded person, you're trying to forecast, right, while also trading the market or investing in the market that we have. Does that make sense? And I'm not perfect. I'm not perfect at all, but I'm just trying to spit out facts for like relating it to the stock market. All right. There's our mouthful of fundamentals. Let's jump into the technicals. Let me check the chat. Everybody good? Basically, you're going for all out puts. I'm not going to say that yet until, but it always happens every year, right? I tell my group, I'm in long-term stuff. Like I'm in long-term stuff in my Charles Schwab, but this pullback right here, we were talking about it in Leverage University for probably 3, 4, 5 months. Like at the beginning of 2024, I said, it'll happen in 2025. It'll be a 2-month period. Something will happen. Be prepared. Do not buy these all-time highs. DCA, turn your brokerage on like $5 a day, $10 a day, whatever. But when you have the opportunity, load up, right? So I'm not saying load up puts right now. I'm just saying that when it happens, same thing as this one right here. I'm looking at a pullback on SPY of 600. Just telling you right now. And I would keep repeating it every single Stop Sermon Sunday, the new all-time highs that we print. Okay? Because having continuous monthly candles like this, very similar to 2021 and 2020. 2020, 1, 2, 3, 4, 5, 6, 7 months of green candles. Okay, cool. Almost 8, 9 months of green candles with only a couple of red candles spurred in. There's 2022 bear market. Okay. Same thing with here, 2023, really 2024. 1, 2, 3, 4, 5, 6, 7, 8. 8 bullish candles. Okay, cool. It's doing the same type of thing. Okay. So we'll trade the bullish market that we're in, maybe scalping some puts, doing this and that, maybe just leaving some of these big runs alone, and we'll point out some that we've got. But I'm not saying at any point publicly, unless I'm in a private one-on-one or I'm in live trading with my group scalping, that someone should buy puts right up here. If you're a long-term investor, Tanvir, as you know, puts are a good way to hedge your long term. So just say someone is up extremely well on their long-term portfolio. Like they've got stocks from, I don't know, the 1990s, 1980s, early 2000s, even 2020, right? They bought stocks for the first time. Maybe they bought stocks in 2022, 2023 for the first time, and they're up extremely well on their long-term portfolio, right? That is when a person might want to consider like, okay, do I buy, maybe one put on the market just in case something happens and hedge? That's up to them. Or they'll just let it drop and then pick up the dip. Right. But I never advise on a public platform for people to load up on puts. No. Cool. All right, let's look at SPY. Let's jump into the monthly chart here. We're coming into the middle of the month of September, and we want to mark, as usual, our monthly levels here and then our weekly levels since starting a new week. So I'll clear up this chart and we'll mark SPY, okay? And the way you want to mark up a monthly chart is marking the low of the candle of the current month, which is 637, and you want to mark the high close of the previous candle. Now, different traders do it differently, right? I like to have a little bit more information sometimes, right? I like to mark like that pivot level, which is the candle wick high of the last month, which is at 649. Okay. So on a monthly chart, you can see that this 645 was very key because what are we doing? We're forming higher lows and higher highs that are closing above. continuously. Okay. The only time I would get like a little bit concerned is if we go on the weekly and we fall back underneath this 649, because that's the previous candle high wick. So as long as we're above 650 to 649, we can push higher, and even it might look like a drastic pullback, but we can push higher from there. Right. So there's our monthly candle view. Let's look at our weekly candle view. Okay. So last week we kind of broke out of a big consolidation that we were in leading up to these rate cuts. So you see that we were kind of grinding up. We got a pullback here, and then we spurred and pushed into new all-time highs. Okay. So as I've got these levels marked, 649, as long as we're above that, right? I can even begin to mark this level right here, which is 652. And that's another support. Okay. So this yellow zone right here is a nice base support that the market kind of wants to make sure that they hold up if we do pull back slightly and then rotate higher. Okay. Let's go to a daily chart. So you see the levels are still sitting there. I can drag them over a little bit now. Okay. So now we get a better view on our daily chart of SPY. Okay. So here's the candles, how they would ideally want to look throughout the week is you'd want to look for these zones to pull back to. Whether you short them with puts back to those zones if we see a signal, or you wait for the pullback to those zones, see how they react, and then we try to rotate and take back out the high like that. Okay. So that's ideally what you want to look for on nice pullbacks in a very extremely bullish market. Okay. It's always going to try to rotate back to try to take out the previous high. Okay. In a bull market. So that's how the candles would ideally look, is pulling back into that 652, 653 zone, maybe even taking a little bit lower and then reclaiming and trying to rotate higher. Okay. Now, if we go into our 4 hour, you can see a little bit more confluence, which is a gap that we created. So that's very much possible that we can fill that little gray gap. Okay. Straight up move. What are we saying here? That it can elicit a straight down move in profit taking. So that means 657 did not ever come back and fill that gap back down to 652, which is very much possible. Okay. So that's what I'm looking for if I'm creating a trade plan for this week, is a pullback for SPY into that 652 to 650 zone. Okay. Now, what does it do there is very key, because we don't know if it's going to flush through it like this and give a big red candle after rate cuts or before rate cuts, or is it going to do something like that? Okay. So you want to be prepared for both, which is why I always, in a bullish market at all-time highs, most traders will tell you they're not going to be trading very well at all-time highs. Like professional traders, or people that are seasoned, or anyone else that you may watch on the markets, you can ask any of them that, hey, do you trade well at all-time highs? Not really, because it's an uncharted blue market or blue sky territory. That means that, okay, cool, I don't know when this top is, right? That's why you see a lot of traders personally lower their risk in options trading or futures, and they're a little bit more patient. And a lot of them, from at least the ones that I watch, and even myself, I would feel more comfortable shorting for scalps, like short puts for scalps. Now, there's definitely bullish setups that we'll go to in just a second, but when we're talking about SPY and QQQ, they're in uncharted territory, and I feel more comfortable in all-time highs where there's really no upside or how far it's going to pull back, is shorting it back to some of these levels. Okay. I haven't been trading personally SPY and QQQ because they've been kind of chopping around and whatnot. I've been trading the Mag 7 like I normally do, and some others. But yeah, if I'm going straight up like this and little pullbacks, little grinds and grinds and grinds and grinds, that grind typically gives a straight down move and a volatility, and then we go back up like that. Okay. So That's how I've been trading the past like week or so leading up to this personally. If you've been trading the bullish side for calls for some of these, that's awesome too, right? We were talking about this in Leverage University inside of, we do teach, we do have little afternoon classes and afternoon sessions. I do have moderators in there, other traders and whatnot that do very well. And we have discussions on like their trade ideas or trade setups, right? And everyone's different. Some people are, only bullish and they see only the bullish side. Some people can trade both sides. Some people like scalping. Some people like, only long-term investing with shares. It doesn't really matter, right? So if you hear someone saying the best strategy or this is the best strategy, this is the only way to do it, that's not, in my opinion, that's not the way to go about it. It's what makes you feel most comfortable and excited and successful. And the moment you don't feel that way, comfortable in the market, you're like, man, I just don't feel comfortable doing this. Like, I don't feel comfortable shorting the market. I don't feel comfortable, taking short trades. I'd rather chill with longer trades. Then you got to change your idea and strategy a little bit. But you got to stick with one, at least to try it for a week, 2 weeks. Some traders, myself included, might say that you may need to have a system for at least a month to a quarter, right? To see if it actually works and if you like it or not. And if it doesn't, you switch. All right. Cool. All right. There's SPY levels. Mark them. There's a previous high right there. 652 pullback. Even 653 might tap into it. The lower end of the range, 649 to 650. We break 649. You got 645 below that we want to pay attention to. Okay. That was my big level right here, which was 645 to 646. Pullback. All right. QQQ. Mark previous levels. Go into a monthly chart here. Briefly look at it. It's uncharted territory, blue sky territories, 590 approaching that nice psych level above. 590 extremely bullish monthly candle here for September, which is wild, but it's only doing that because of rate cuts that are supposed to be already priced in, or this might be just, like I said before, pushing up already priced in that, hey, we already know rate cuts are coming. So we're just going to get a bullish movement into the data, right? Kind of buy the rumor, sell the news, very similar to the Apple event. Apple ran up into that event, popped, and then sold right back off, okay? Weekly candle. Let's look at that. Okay, extremely bullish, broke above that previous high. That is now your support, 583. Okay, so that is the level you want to pay attention to this week. What do we do at 583.34 or 583? You can turn your alerts on. 583 is very key to hold. If we break below that very aggressively like that, right, then you've got 580 in sight. Okay. You see these gaps down below, 580, 581. And if you know, if you've been on here multiple stock summer Sundays, our levels are pretty on point, right? I'm not saying when it's going to happen. I'm not saying, hey, tomorrow it's going to happen. I'm not trying to clickbait or do anything like that with folks. I'm just saying that our levels are pretty on point, that those are typically the pullback levels that we see, right? So 583 is the first thing that we could pull back and hold. You want to be prepared for lower, 580. And then if we have something drastic, 576. Okay. 576. And I've got that 573 as a big support level below. Okay. Right there. That's where we popped above. There's a lot of interaction right there about 575. And that's how it would kind of look. All right. So that is very possible. All right, we've had it before, and we can have another pullback before, and then we can still go higher. All right. My concern, right, which I'm always prepared for the opposition until proven otherwise, is if we start getting very drastic below there, right, whenever that happens, right, below 574, 573, 574, technically a little bit of a trend break, and that would be on this trend line right here. And we could come all the way back down to 565 and you see, things like that. Okay. I'm not projecting that at all. 573 to 575 is my like big pullback level. Okay. Slow grind up, slow grind up, slow grind up, slow grind up, slow grind up. Pull back, pull back, pull back. Try to find a base and then maybe go back up like that. Everybody see that? So that's what's going on in my mind as to what I would want to see to feel comfortable, like in buys or in calls again on the overall market, is to have some type of pullback like that if possible. All right. IWM is going to be on the top watch this week because IWM small caps are very sensitive to rate cuts. Okay. Which is why it's been bullish up into all the rate cut announcements. But IWM's got one job to do with these rate cuts: to break bullish out of this wedge, right, to 250. Bullish out of that wedge to 250. All right. If this was already priced in, then we'll have a big pullback on IWM like that. All right. So IWM should be really nice to trade this week with rate cuts in play. So pay attention to IWM. I've not been looking at it as of late. And if you can see there, it's at recent all-time highs at 243.04 is the recent all-time high. Okay, that it touched. We didn't have any closes really strongly above 240 yet. As you can see, these candle closes on a daily are right there. That's the strongest candle close. 240.50. Okay, and we rejected right on that. Okay, so got to get above that 241 level for IWM to really start spurting higher. So I'll be watching IWM this week as well. All right, let's talk about it. Tesla. Okay, Tesla. My goodness. All right, Tesla back at 400, like nothing. All right, there was a little bit of a gap fill up here that it's already filling. If you can see, there we go, right there, a little light gray area. There's that gap that was created a little bit right there back in February, January of this year. Okay, so it's filling that gap back up to 400. 400 is a big level. So with a straight up move breakout like this, I would expect Tesla to pull back, but the pullback levels are pretty clear, which are 370 to 373. And then we've got those previous highs right there to 367. You can do with these levels what you please. If you do trade Tesla, these could be shorting back to this pullback level. This could be waiting for a pullback since it's so bullish, right? So Tesla, extremely bullish. I will look at TSLL as well. If you've got TSLL shares, congrats. That is the leverage version of Tesla. You can see it breaking out very similarly right there. Okay. So TSLL breaking out, it's got some resistance right around 18 or so. So Tesla, it could go to 500. I don't doubt that at all with Tesla. Back to all-time highs, trying to take it out, go to 500. I mean, this looks extremely bullish here, but you know how volatile Tesla is. And it's typically very bullish going into the end of the year, right? Typically very bullish. This is a very bullish kind of breakout chart right here. And it's broken out of this wedge, out of a monthly wedge. And if you're trying to get a part of Tesla with this breakout, gotta wait for a pullback and you can try to get some rotation back up. If you're not comfortable trading the volatility of Tesla, you can look at TSLL for shares. And I would look at a pullback closer to $15 if possible, 14, $15 in the short term, with the opportunity for TSLL to go all the way back. You see when Tesla was at all-time highs, TSLL was at $40. Okay. So that would be a double up for shares, even if you got into TSLL shares. So if you're bullish on Tesla or you're trying to get a part of Tesla, but yet Tesla's maybe too expensive or a little bit too pricey, or the options contracts are a little bit too volatile, moving $20, $30, $40, $50, you can look at TSLL. Okay. So just going to get that out of the way for Tesla. Watching 400, see how 400 reacts, breaks above or rejects and pulls back a little bit deeper. All right. Let's look at Apple after their event. Okay. Apple had their event, their release day. Everyone's, let me know down below. Put a 2 down below if you are, we talked about this last week. If you like the new Apple products, like the new app, the iPhone 17, put a 2, right? Put a 3 if you're, again, either you're not an Apple person or you just are not impressed by it. I personally, I've got a 15 Pro. I only got it because my 11 went kaput and just turned off one day. I'm like, I took care of it, no cracks, no nothing, and it just went out. You know how they do. So got a 15 Pro, not the Pro Max. I have an iPad, I have a MacBook Air, I have AirPods, like, but I really don't care personally. Right? I think it's cool tech, but zero. He's like, I can care less. Yeah. Yep. I'm gonna read all the comments. So Tanvir, appreciate your comments, man. So if we do have rate cuts, yeah, Tesla could break above 400, go to 420, 430, and then ultimately 450 plus. All right. Apple, I like the levels that Apple's at. One trade idea that I like on Apple, this big pickup here at 225 was pretty nice. Nice higher low there. But into this 235, I was really watching because it's got this nice channel here. If it breaks above 235, we're bullish going into trying to get to 250 ultimately. Right? That's where, you know, Apple's trying to get to, ultimately 250 plus. But what I'm watching for is I really wanted to see a bigger pullback on Apple personally. So I'm watching this idea here. Is this a potential like head and shoulders? If I see a reject at 235 and the market's also pulling back a little bit, right, I'm looking for that type of idea. Not that deep past 220 that quickly, but I was looking for Apple to maybe reject this level again, is retesting it and then pulling back a little bit deeper there. So that's just an idea. I like the levels that Apple's at personally right now, 235. It's a nice weekly level as well. I don't know what that candle is right there. That'd be crazy. But do you see me marking? I trade, or I like to trade off of big weekly or monthly levels. That gives me a nice confluence. You see right there, 235 pulled all the way back, 235 pulled all the way back, 235 pulled all the way back, 235 right there. Right. So it's at 235 again with some gaps below. Right. So Apple, very high on the watch of what it does at 235. I see it rolling over here. If it breaks underneath 230, that's kind of my signal. Right. Breaks underneath 230 like that. Retest. Then go. Right. So that's an idea I'm looking for. I'm also bullish on it if it gets above that 236. I know it's going back to 240 plus. Okay, so got my eye on Apple, kind of interested on it. Amazon, kind of the same look here, getting a little bit concerning at this. I've got, you see, I drew the idea here on Amazon is that it is in support. So I'm bullish until the market gives me otherwise with this FOMC. We don't know yet what it's going to do. Okay. So Amazon pull back, filled that gap, right, from that pop up of the news. And very similar to Apple, it could retrace out of here and push all the way back up to 236 and try to retest the high of right here to 236. Okay. So I'm watching Amazon, what it does here. If it holds here, that could be a nice like call idea back up. There are some gaps, as you can see. It could be a nice call idea. We've been missing some Amazon calls lately, and we've been calling them out pretty well. So I'm going to draw this nice little falling wedge trend there and just see if it breaks out of it strongly back above 230, retest, and that could be our move back up to the upside. See some buyers step back in there on Amazon. So 225, 226, watch that on Amazon this week. If it holds, that could be a nice call trade to rotate right back up. Okay. Google, leave it alone right now until it does something. I I told everybody, like you said, Tanvir, I was waiting forever for Microsoft to short it. I'm kind of doing the same thing with Google. I've got my alerts on right there. Break below 235 is where I'll start to get interested on Google. I'm leaving it alone. I tried to short it a couple times, made the money back, obviously, in other trades, but I'm just leaving the Google alone until it gives me something a little bit more volatile out of there. But it's getting close. It's getting close. The RSI is extremely overextended. Daily it's at 80, right? Weekly at 80, monthly starting to get up there in the high 70s. So it's due, right? It is due. It could be that weekly OPEX we were talking about that happens this week on the 19th. It could be that quarterly OPEX or OPEX where Google pulls back at the beginning of October, right? So, yeah. But I just do not want to sit in it yet again, waiting on it for it to happen. But like these October 3rds are looking pretty decent if we have a big pullback. But I'm not signaling to my community. I'm not telling anybody. We tried it a couple times, and I'm not going to put anybody and myself into that position again of just shorting it, guessing. We don't guess, we react. So I like the idea, but I need a signal. Does that make sense for everybody? So I would love like a lower high breakdown below 235, give up that level again and show us a little bit more. Because every time it pops down, oh, nope, pop, nope, pop. The dip's getting picked up, which is crazy to me up here personally. It's going to trap folks. It's going to trap folks. Microsoft sitting in support, 500. That'll be interesting. Meta, not really interested. We talked about Tesla already. Where's that gap that you were talking about? Tanvir. I don't see another. Okay, I see a little gap up there up to 450. And then there's that 420 level that we were talking about right there. And then marking that 440. So those are the top end levels there. 420 next level. So we know it's headed to 420. All right, let's talk about our semiconductors. Let's look at NVIDIA. I left NVIDIA alone after it popped because it just wasn't doing anything here. It wasn't, it was just consolidating. So NVIDIA does one of two things this week. You want to draw this on your charts. I think it's a great trade, whichever way it breaks. So if NVIDIA breaks back above this 179 level, then we can get a nice push up into 182 and 181. Okay. So I'm watching that on NVIDIA is maybe it gives one more little pop like that. And we got some resistance up above. Okay. So NVIDIA obviously holding bullish structure here, did not really break down. So we know it's bullish until otherwise, if it breaks out of this to the downside underneath 176. Breaks underneath 176 into that gap. Then we've got 173. Then we've got 170. Okay. So NVIDIA high alert. I've got my alerts on right here. You can see those little bells right there where it's breaking. Get an alert for that when it happens. Let me get one here just in case. Break above this 179. Let's talk about AMD. AMD is interesting. It's very interesting because we called kind of the bullish move on AMD. The bullish move on AMD, and it's holding again, right? It broke back above this 153, held 153, double bottomed. And then my idea on AMD and for NVIDIA too is with these rate cuts and the pullback before with the semiconductors, can AMD, is this just a pullback hold to rotate right back up to 170 where it couldn't get back up to with the big move? All right. You can kind of see it a little bit there. There's a gap up at the top there. There's a big, move back up there like that. And we've kind of got this little inverse head and shoulders. Y'all see it here? There, there, there. And I swear if this happens, what I'll be looking for is a break back above 161 on AMD, which is right there. That breaks back above that level. It's going to probably start getting a big move, depending on where the market's going, back up to at least, 165, then 170, like that. Okay. So above 161 on AMD, I'd watch it back up to 164, 165. We break above 165, AMD is going to start moving. AMD is going to start moving. Okay. As you can see, a lot of buyers holding this. This is like a capitulation reclaim, pop up, reclaim, hold. And then last time it did that, popped back up to 165. Okay. So let me see where the daily moves are. Daily 20 is sitting right there at 164. Okay. Gets above that blue line right there, it's going to start moving. Okay. Gets above that 164. Pop. First pullback. Start looking at potentially a 180 target, maybe. Like AMD, out of nowhere, it comes out and makes some massive just moves out of nowhere. Okay. But it's also very, very volatile, right? So I would love for AMD to tick down one more time. That'd be awesome. Then reclaim and go. But AMD, like I usually wait for AMD to do some massive pullbacks from highs, not massive, but some decent pullbacks. This is a pullback of roughly 20%. So that's in kind of that correction territory of AMD, anywhere above 20% correction territory. That's a 20% correction that's warranted, and AMD could rotate back up if we do get bullish above 164. All right. So I'm mentioning it multiple times. The semiconductors did pull back pretty decently. I'd love NVIDIA to fill this gap if possible. Just dip back down or hold 173. I like it at 173 and rotate right back up if possible. All right. AMD high alert above 164. If it sits there and rotates and gets weak back below, wait for those lower levels in the mid 140s. All right. MU, my goodness. One of my new, you see it moved up in my watch list. One of my new kind of favorites. I've been trading it recently, and it moved. We talked about it here on Stock Summer Sunday. I think Tanvir or somebody asked about, what do you think about MU? I loved it when we were talking about, MU around this 115, and some people were asking at this like 107 level. I was like, it's bullish. And then it pulled back to 116, just held for a couple of weeks and just absolutely took off. It's got earnings coming up. So earnings on MU next week. And anytime you're extremely bullish like this into earnings, I'm personally always a little bit cautious of that because it could pull back with earnings, and it could do like here's a perfect example. Not saying this always happens, but here's Oracle. Oracle was pulling back into earnings, had horrible earnings, but great guidance and popped, right? So that was pulling back into earnings, which I liked. And then this one is running up into earnings, which I'm a little bit more kind of like, chasing at this point. It may have great earnings and it may pop a little bit and then pull back immediately. Okay. So MU, this could be a massive mover here, depending on which way the market goes, where it breaks, whatever. But this is gap up, another price upgrade, gap up. And I would love to catch it back down to 150 if possible. Those contracts move very, very well. That'd be great if it could do it this week. It may sit and chop. It may want 160. We'll see, but keep MU on high alert in your semiconductor watch list. So I like AMD. I like MU. NVIDIA kind of chopping a little bit right now, so need to wait on it. AVGO, also another good one with some gaps down below that popped with the Oracle earning news. So a little bit bigger mover, obviously. Contract's a little bit more pricey. Um, this one, it's got such wide ranges. I'd probably just watch that break of that previous low or hold of it. This could be a nice little bullish consolidation, rotate back up, or it could break bounce below, and then we get 350 in sight. So I'll just have to watch that inside of our live trading chat to see where it goes. ARM, great pop out of this consolidation here. So popped out of that move, pulling back 140. ARM might want to rotate and fill that remainder of the gap up to 170 plus. So it's in the middle of a move right now, so just have to wait on it. Let's talk about Palantir really quick. Broke out of this bullish move here. We were watching this consolidation, which way it was going to break. Palantir just trying to rotate back to the highs. Like, there's nothing other than this weekly candle trying to go all the way back up to these highs. We've got some weekly stops right there, which is 175. So 175 is that next pit stop to see where it does at 175 for Palantir. So 175, watching that, see what it does. But extremely bullish. It's in the middle of a move. So here's the top of the range. Here's the bottom of the range. It's in the middle. So I'm not personally really interested in it. But if you want to trade the momentum, you could just, have a risk to reward below 170 or below this previous candle, 165, and then try to take it all the way back up to the highs if you want. Congrats to my boy James for catching Oracle to the downside. If Ben is on here, he had literally the perfect Oracle entry. He had 342.5 puts right up here, and he doesn't trade options very often. He's usually more of an equity trader. I was like, Ben, if you were in live trading with us, bro, I would have been like, bro, just hold that. You can hold that to the end of the day. Like, you got next week contracts. There was technically sound for that to be, an easy double up. Right, an easy $3,000 trade, So, but congrats to anyone that caught that. Oracle had pretty poor earnings, great guidance. So it popped on the guidance, pulling back on the earnings miss. So it's in the middle of the gap. I would need to pop back up on it. But if you want to take momentum, you've got back down to this 260 level. It's broken below 300. So almost giving the whole earnings move back up. Hood. Amazing candle. Amazing. I'm going to talk about Hood. I'm going to leave Hood to the last piece because I'm going to jump on to my Robinhood legend in just a second. SoFi, that could be really good. So keep SoFi on your watch for what happens with the interest rate cuts. All-time highs on SoFi sitting at 28.26. Previous all-time close is at 25. So as long as it holds that 25 level right there, you are bullish, right? Breaks back below 25. That's where it gets a little bit concerning. Okay, so it breaks back below 25. You see it in the 24s. All right, we could start seeing some bigger pullbacks, which is why I have like a kind of a pop and fade idea on it potentially. Maybe just wants to get up here and then rotate back down. Congrats to anyone with SoFi shares, looking great. If you're looking to get into SoFi, I'd personally wait for a pullback whenever that happens, maybe at the end of the year, something like that. But I'm looking for like an $18 to $20 pullback on SoFi. $18 to $20. Let me check the chat. Any questions? Are we still going good? Can I get a 5 in the chat for anybody? We're still going good for everybody? AMD, I'm shorting at 179. Yeah, for sure. For sure, Tanvir. I'm with you on that. So I'm still a little bit hesitant on the bullish side just because the market's at all-time highs, right? But AMD, if it does get bullish, great short setup in my opinion. Pop one more time up to 179, 180, very similar to what Nvidia's doing, right? And then short it back down. But what's the word? Not indiscretion, but the dissonance, or dang, I can't even think of the word. The the discorrelation. There we go. The discorrelation between the market being at all-time highs and then AMD trying to get bullish against the market. I'm a little bit, yeah, you know what I'm saying? So I have a bullish idea, but also if the market pulls back, AMD might not be able to get that bullish strength. All right, I'm gonna answer some questions really quick. Thanks so much. I appreciate the early chat, and we'll be wrapping up here in the next 15 minutes or so. So I'll work backwards here since y'all been spamming the chat in a good way. Should I sell NVIDIA on Monday pre-market? Krusty, give me some context, man. Give me some context. So if you're still there, Krusty, I appreciate you. I apologize for the late response to your question, but like, what does that mean? Do you have shares? When did you buy them? Do you have an options contract? Like, what's your average cost? If you don't mind sharing that, that would help me out a lot answering that question, because selling NVIDIA on Monday pre-market is kind of, I wouldn't suggest that unless you just bought it for the first time and your average cost is at 178, 177. You know, give me a little context on that. That would help me better answer that question. Can't wait to short Oracle. Yeah, if it gets a pop, I would love to short it again. Oracle gives any type of pop. If you want to short momentum, Tanvir, you're more than welcome. Agree, Microsoft, NVIDIA, and Google looking exhausted. Yeah, I agree. Risk to reward a lot greater on NVIDIA and Google than Microsoft, because Microsoft already kind of pulled back. I would look at Microsoft breaking below that 500 level. If it fails back below 500, that could be your signal. But yeah. Let's see. If Apple back tests 220, 220 and 221 on Apple, I like for that support going long for calls. That's what long means for anyone that's a beginner. Going long for calls, that means you're wanting it to go back to the upside. So Apple long at 220 to 221. So that's the level that we want Apple to pull back to. So that's why we were talking about Apple shorting it underneath that 236 to 238 mark, underneath 240. 235 rejection would be great, but if it pops any higher, I think Apple personally would be a better pullback to 220. Cool. We talked about the Tesla calls. Still long Affirm, Upstart, Open, RKT, excuse me. Way overbought, but 25% short interest. Basically, you're going for all out puts. Okay, cool. Answered all the questions. Awesome. Anybody else? Like, I know Tanvir's asking a lot of questions. Please, like, even if it's like a beginner questions or something like that, please ask away if you can. If Tanvir's questions are helping you, that's cool too. All right. Why? Question mark. If you're in profit, continue to hold NVIDIA easy 240 by 2027. Yeah. So Krusty, there you go. There's your thought process. So in summary, if you have shares of NVIDIA, even if you got in late on NVIDIA, like a 160, 170, even if you got in NVIDIA at 180, right, and you bought the highs, right, and you got shares on NVIDIA, think long term, right? Buy more if it dips, right? I've got a 150 pullback on NVIDIA. If it does 150 to 155, 160 would be great, right? But if it stays above this 170 mark, right, we're going to 200 plus, right? So if you got an average cost, you got to think long term. You just may have to endure a little bit of back and forth right now if you got shares. So no reason to sell. So yeah, when you ask that question, like, what does that mean? Because for context, anybody, if Krusty, I don't know, I'm on a public platform. This is not financial advice. So if Krusty said, hey, Brian, and maybe Krusty has got, 1,000 shares in NVIDIA and he bought it all at 180. And he's like, Brian, I just loaded my savings account. I took out a loan. I took out everything I put in NVIDIA. Then that's a different story, right? I gotta, like, if y'all are on my seat, like, you gotta ask these questions, right? Because you don't know who it is. You're on a public platform. Anyone can join. So I'm always trying to protect anybody that asks these questions, never judging, never, putting anyone down or anything like that. Just getting context, right? Like, what do you mean by that? But yeah, in the long term, holding Nvidia, it's going past 200 plus. All right. All right. Let's keep going. So we're down to, if you've been watching me for a while, the yellow are my indices. Okay. The blue is my kind of Mag 7 or what I trade on a regular basis. I put purple for my semiconductors. I put Palantir in here as well, but more of my semiconductors and some other tech. Obviously, Oracle's in there. Finance, green, and then kind of orange are my slower movers or kind of side watches that I have, like Zoom, some setups, Uber. I like to trade some setups that might take a little bit that I don't trade on a regular. Might have some gap fills like Snow. Shopify made some big moves recently, so I'll keep those. APP popped with Hood. On that addition into the S&P. And then the white here on my watch list is going to be like long-term moves, right? Brian, this is the question that everyone asks. Is there anything I can buy that's on a dip right now? Because everyone says everything's overextended. Yes, there are a lot of things, okay? Healthcare, right? We talked about CNC, okay? That is one that I personally think that it will be 60, 70 bucks over the next 2 years, okay? I even have a $100 price target back on it again. Once healthcare, the market recoups itself, healthcare insurance not going anywhere. I know people have questions about Medicare, Medicaid, but from a technical sound perspective, fundamental perspective, Centene, right in line with, I'm not saying it's big as United Health, but it is right in line with United Health. It's moving roughly the same. Okay. So if you see the chart on United Health popping off these lows, if you see CNC popping off these lows, roughly the same chart. So if you can't afford, UNH, or it's a little bit too volatile for you, CNC is a great option. I think leaps into 2027 is great. Some of us are already in leaps for this. They're already up 40% plus on the leaps on entering right at 30 bucks when I talked about it. I've got shares at 26. So any pullback on this around 30 bucks, we've got a $50 short-term target, $40 short-term target, breaks above 42. We're off to the races, back to roughly around 60. Okay. So this is a great opportunity for anyone that's like, hey, I can't spend this much, but I can get a full share of CNC or multiple shares, or hey, Brian, I can pick up 100 shares of this, right? I got $3,000, whatever. Okay. Let's keep it moving here. Lululemon, getting really interesting. Lululemon has broken below 160 now. Okay. So that's a little bit concerning. I'm waiting on Lululemon. I would be interested in it around 130. You can begin picking up shares on Lululemon if you're a buyer of it, if you're a believer in it, even if it's in the consumer discretionary space and you're like, I don't trust that, right? Then wait for lower. But if you have done your due diligence, Lululemon is a great, great buy area back in this kind of zone of 130 to 160. Okay, so 130 to 150. We're just waiting on more of a signal because you can see it's really not giving any buyers yet. There's no wicks at the bottom. Okay. Let's see. UPS, also interesting, a double bottom here. This is a little bit more speculative, but it's very interesting at 80 bucks. Another one that I think it's a great risk to reward. Okay. Great risk to reward at 80 bucks, even down into 75. And if you think about I don't know, you got to think about where's it going to be in a year from now? Right? If you believe personally, it's going to recover at minimum back to $100. Okay. So it doesn't mean you have to buy everything on this watch list. I personally don't, but I keep it up to say, what's the best risk to reward? What do I believe in? What have I done my due diligence on? So minimum $100. So even if you're down for a little bit on this, it goes down to the 70s. I think UPS personally is a great interest to watch around 80 bucks. All right. Lululemon, we talked about. Trade Desk, another one. Same thing, 40 bucks. It had pretty decent earnings, right? Had pretty decent earnings. So I've got a level on it right around 40 on TTD. So about $5 off kind of that perfect entry. But it's $5 off. So I'd watch it around 40 bucks, $42 coming into this level. I want to see what it does here first. All right. Last time I got to 42, went all the way back up to 90. Right. So these all in white, Kava, watching that as well, coming into $60. Okay. Watching that. Lyft, great breakout here. Lyft, if you don't have shares, I mean, Lyft personally, this could be like the daggone bros that we were in. Okay. Y'all remember when I told folks to buy Dutch Bros at $30 or under? It went to 90. We put that in our chat. Okay. If you're familiar with Dutch Bros Coffee, I gave my rationale. I said, hey, they don't have a real estate footprint. If you notice, they're all in strip malls. They don't have any indoor seating. They can profit more. They have better coffee. You get more bang for your buck. And there it is. Right. So that was my fundamental analysis looking at this at underneath $30. It went to 90. So same thing with some of these Lyft, very similar to Uber. I mean, this chart looks roughly the same. Same thing when we went to Ionic. Okay. Ionic fundamental analysis. We got Ionic underneath $10. Okay. Went to 55. So when I'm looking at these charts, I look at the charts and I'm like, hey, the chart looks great. Let me look at the company. Right. So these are sound companies. Lyft, sound companies just became profitable. Right. I have $80 price target on Lyft. Like, it's got to get through some levels first, obviously, but $30 in the short term. So if you're looking at buying it right around underneath $20, like, yeah. Uber, same thing when it was down here. $30, now almost at 100. All right. Cool. Oscar Health, another one, bullish structure coming out. Duolingo, it's a little bit bigger stock here, but great looking chart there. Retested the high at 250, bounced off of that, already back at 300, right? Looking great, bullish off of there. So, yeah. Yeah, exactly. Could you please look at gold, GLD? Yep. And then I'm out of here. GLD. I like that 330 level. I want it to hold 330. So you get a 330 pullback. That could be really nice, 10 veer. 330 or a breakout above 337. You can start getting that 340 push. So this could be just a bullish consolidation right here. All right, so if it stays there, you get a breakout above that 337, could get that 340 push like that. Breaks below that, I would look for 330 into that gap like that. Cool. Yeah, exactly. UPS dividend alone. Great dividend payout stock. So shares alone, that's a great pickup at $80. Get paid by UPS. All right, folks. Any final last questions? Going back up, I think I answered everybody. It's going to be kind of more of a patience week. I think, whichever way it goes, we're going to be good, but I've got my head on a swivel. Is it priced in and we drop? Or let me know if you think, hey, if we get rate cuts and it pops higher and then we drop later towards the end of the month, right? We don't know, right? But I appreciate y'all tapping in with me a little bit earlier today. I will see y'all tomorrow in live trading. Get everything ready to go. And Hood, like we talked about, the new options and new things they've got going on are awesome, right? I've separated my different accounts here. If you can see, I've got my day trading account. I got my swings and leaps, retirement, Roth IRA, everything all organized very well inside of Robinhood. All right. So loving the platform as of late. I think they still need a little bit more tweaking personally on the charting platform. I think some of the things that Webull still has on the charting, I just like still. All right. Thank y'all. Peace, love, and blessings. Y'all have a good one. If you need to rewatch it back, join Leverage University this week or by the end of the month. We'd love to have you for the remainder of the quarter into the end of the year. We got some really good setups coming in. We want you to be a part of it. And also, it's better to trade with a group, in my opinion. Even if you think you know everything, I think it's always great to be a part of a group. There's a monthly fee, and you can be inside. You can cancel anytime you want to. We'd love to have you. But yeah, don't want you to miss any opportunities. And it's fun. All right. So thank y'all so much for the support. Even if you want to support the community, Just some more support. Like, hey, I liked your YouTube channel. I'll just join because I like the YouTube channel, right? Pay for someone else to come in. If you got a son, daughter, nephew, we have people that gift and say, hey, I think you should learn from this person. Join their community. He'll teach you something. We do have people that gift memberships as well. All right, coin. It's just consolidating right now. I would look for a breakout above the previous high, above 330. Breaks out above 330. I've got a 350 target in play. I already did a Fibonacci extension on it from the lows on a weekly time frame. Breaks above 330. You got 350 in sight, and then you got 380 plus. Very similar to like a Tesla move. Yep. Looks really good on the daily. See above that daily 20, breaks above that daily 50. It's off to the races. So I like it. Bullish.